This video is all about multiple time frame support and resistance. How to identify it, why is it so important, and how do we use it in our trading decisions. Towards the end of the video, I'm going to introduce you to a unique technique on how to use support and resistance, how to identify support and resistance, which is a little bit different than the standard we're going to go over now. So let's go over to the charts and get right into it. Here we are on the 1 hour chart of the S&P 500. This is the ES. And what is support and resistance? So support and resistance is an area where price has interacted multiple times and either hasn't passed that area or has passed it, and now it becomes support. So let's identify. It's easier to identify on the chart. So here we have an area where we see price came up several times. Let me get my drawing tool here. And we have 1, 2, 3, 4. As you can see, there's 4 areas of interest here. Price came up, tried to break through 4 separate times, and it could not. And now it just went straight back down over here, as you can see. So now it has become resistance because the price has not broken through that area after several attempts. So we can draw a line there, hit Alt-H, and it draws a horizontal line. And now if once it does break through, it becomes support. And as you can see, it came back and touched once, twice, and then took right off. Now here's another area right here, 1, 2, 3, 4. We have several touches there. 1, 2, 3, and now it's declining. So it's not precise, it's an area. So it's not exactly, you can't draw a line every time, but more you can draw a box. So you can draw a box for an area that becomes an area of interest. And then you can take it all the way over, of course. And as you see, the previous resistance has become support further in the future. So what I like to do is go in to start with the 1 hour or the 4 hour. You can also start with the 4 hour. Let's jump on over to the 4 hour. But I do like the 1 hour. And you can also draw these in separate, different colors for different hours. Come up here, I've got different major support and resistance. I've got this in orange. This is my major support and resistance area. And there we have our 4 hour. And as you can see, it did come down here and act as support once it broke through. It took a long time to break through, but then it acted as a very, very good support. Then you can come down to the 1 hour. Now we still have our 4 hour line there. This is our support. We also have a 1 hour right here, and then we have a 1 hour box up here. So support and resistance is the #1 step in technical analysis, in my opinion. I don't know how anyone could have a trading plan without it, other than doing just order flow and not using the charts at all. But if you're doing you have a chart-based plan of trading, then support and resistance is vitally important. And like I said, it works on different time frames. We can move on down to the 5 minutes. And here's an area of interest right here. We have this point, this point, this point, and this point. So this is all an area of interest right here, of support at this time, that the price cannot seem to break down through. And equally, we have areas of interest up top here. We have lots of touches up here, 1, 2, 3, 4, as well as back here. So we could actually draw lines in these areas, or more accurately, you could draw a box to act as an area of support and resistance. So right now it's resistance because the price is not broken through. And these areas down here are areas of support. And you could draw a large box in this area too. It's quite a large area. I don't like my support areas to be quite that big. Another form of support and resistance are fair value gaps. And I know that's controversial. Some people use them, some people don't. But in here, we are going to identify some fair value gaps and see if they are act as support and resistance. And here we are in the 5 minute. Let's go up to the 15 minute actually. So a fair value gap is where you have a gap in between the tail of the first bar and the wick of the third bar. And then the second bar, we have a large open area in here. So this would be a 15-minute fair value gap here. And I'm going to identify it as a 15 So I have a green color for this one. This is what I use for 15-minute fair value gaps, and this can act as a resistance as price comes back in or up to it, and as a magnet as well. So we have another one here. The one that's further away from price action is usually the most important one, but of course you have to make your way back up to it. And as you can see, price came down, came down, came down, and then interacted with the fair value gap itself. So act as resistance in this case. And then now we have fair value gaps down here, which can act as support as the price comes down. You have one right here, and you can just take it over. And as price moves, you can keep taking it over. And you can see it didn't quite get down to this support level. There's also a fair value gap right here where it did interact quite a bit. So it's up to you if you want to use fair value gaps or not. I know it's very controversial with the ICT and all that, but I do find them to be quite helpful. I don't use them primarily as a trading tool, but I will look at them to identify internal support and resistance. That's in between the major areas. So you have your external areas of support and resistance up here. It's outside the price range. So you have one up here as your support, and you have one down here as your resistance. Strike that, reverse it. Down here is support, up there as resistance. And internally, you can look at fair value gaps and see if price is interacting with them. And you have to identify what the price is doing at that fair value gap. Is it going to respect the fair value gap and reverse, or is it going to bust through it and use it as support? And that's called an inverse fair value gap. So now we're going to use something a little bit unusual in thinking of support and resistance, and that is volume profile. This is going to be a fixed range volume profile. So what you do is come over here and start. I only use it from the opening to the close of the New York session, which is 8:30 Central Time to 1500 hours, 1500 right there. And then I continue on every day up until the present time. Do this every day actually. Okay, so here they are all drawn out for a week or so. This one is not drawn out because it was a holiday shortened day. And let me explain what we have here. So we have the top of the value area and the low of the value area. And the value area is the area where most auctions were taking place, where buy and sells were taking place on that particular time frame. And this is the whole New York session. So during the New York session, this was the value area where buyers and sellers determined that this was the value area where the price was the most reasonable. And then this yellow line here is the point of control where the absolute most transactions took place for that period. And this is for the New York session. So we can use these as support and resistance for the following day. And I do this for my analysis to predict where price might go for that next day. I know we're not in the job of predicting, it's more observing, but in this situation I do like to look ahead and see where price might have some resistance or some support. So this one is an outlier right here, so I don't really take that into consideration too much. But I do take all these into consideration. So this one we had a tight value area right here. So the next day will probably break out of that area, and it did. So it opened below the value area here. And then, so it had, these were acting as resistance on the way up. So they were going to have a hard time going through, but in this case they blasted right through. And then price for the next few days found a range right in here. So after it finds a range for a couple days, you can assume that it may break out, because they never stay in value for very long. Either they're going to break down or break up out of value. And in this case, it did break up to the upside on this shortened holiday day. It went very high up. So now, looking at this price action, we know that it broke out of value area, and now the value area highs for both days are fairly close. so they can act as support as the price comes down. And as you can see, the price came down into this area. Didn't quite get down into value on this day. It stayed in a tight range. Once it's in a tight range, it's going to break out one way or another. And it broke out to the downside here. And we found the value area for this final day over here of the trading week was in line with this value area and pretty much in this value area as well. Didn't quite make it down to the point of control. So as the price is coming down, these are resistance areas. There's more like speed bumps. So we have a speed bump here for this value area. First one, we have this one. This is a value area high. This is a speed bump here. It came through this speed bump. Now it has to work through, has to fight to get through these point of controls. You have two of them that are fairly close. So price has to come down through that. It did. It came all the way down to the lower end of value for this day and inside value. So it's inside value for this day. So it didn't break out of value for both days. So it acted as support. And that's how you can use them. If you can combine them together, you can use them as support and resistance areas. So I'm not going to get in too depth in the volume profile, but there's one more thing I want to point out. As you can see, we had our fair value gap right here, and then you can see that on the volume profile. It acts as a big gap. So here's a big gap in volume profile where there was not many transactions taking place in this price zone. So it just went from here all the way down into here, and then found a little bit of support here. Congestion in the price action. We got a lot of volume coming up, and then it just broke down all the way down super fast through here. Also, we have a gap here. So these can be represented on the chart as fair value gap, and these are called single prints. And the market does not like that, so eventually it will come back and try to fill these holes in. So that's all I have for you today. I'll see you in the next video.